Today we are going to discuss our first topic, our first day coverage on the computerized accounting training. As we discussed earlier in the group, we have 5 days, and the first day will cover the introduction, accounting system setup, and foundations. On the second day, we will have to do a lot in recording business transactions, adjustments, control, error management, and so on. So let us focus on today's coverage. Now let us start with the meaning of accounting. What is accounting? So speaking of accounting is the process of doing the following. Number one, it is the process of recording transaction. Without transaction, there is no accounting. So the accounting only starts when the business performs transaction. And there we are recording transaction because we need to keep records of what happened, what the business has paid or received, what the business have incurred or earned from undertakings. And then we will have a lot of transactions in the different style. Suppose maybe you are recording sales, purchases, payment, receipt, adjustments. Then after some time, we will need to classify them in order to know what kind of transactions do we have. So in this case, the transactions of similar nature are grouped together. Kama una sales, they will be added together to get the total sales. Kama una purchases, they will be added together to get the total purchases. And then from there, we'll have the transactions in groups. Then after having the groups will have a lot of transactions, which you cannot say if you have sold 100 times and they ask you how much is sales. If you do not have the balance, then it will be harder for you to understand how much was the sales. So in order to maintain that, then we need to summarize. Summarizing the transaction is all about getting the balances, filter them to get the profit, filter them to get the figure of assets that will be entered in the balance sheet and other financial statements. Then after summarizing, we have profit, we have financial position. Now we can analyze the movement of the business. We need to know whether the business is making money. We need to know whether the business is growing or it is stagnant. So those factors are analyzed after preparing financial statement, which again, it is the point of summarizing the financial information. Then after analyzing, accounting also is involved in communicating information to other users. As we know, not all users are familiar with the accounting issues. So it is the duty of an accountant to communicate information in a way that other users who are not technically accountants, they can understand and make decisions based on those information. So it is also part of accounting to communicate information to the user of financial information. So that is the definition of accounting. Let us see the accounting cycle. As I told you earlier, the accounting starts from transaction. So those transactions are the one which give us account. Then after that, we have what we call source documents. Source documents here, these are the documents where the transactions are recorded. For example, when we buy, you'll either get a receipt, invoice. Those are what we call source documents. So source documents may include pay-in slip, sales invoice, purchase invoice, sales order, receipt, check counterfoil, and others. So those documents, they are the one which are serving as the evidence for recording transaction. Now after the source documents, then we'll have books of prime entries. Now books of prime entries, these are the books where the transactions are recorded first for the purpose of classification. Okay, so they are recorded in groups of similar nature. For example, all sales will be recorded in sales book. All receipt will be recorded in the receipt book. All payments will be recorded in the payment books, and so on. And that is how even the accounting systems work. We have one accounting system with the multiple books. For each book, one transaction is recorded. Then after recording here, we have ledgers. Ledgers, these are the books where the transactions are posted after the books of prime entry. So you prepare the books of prime entry and you post them to the ledger so that they can summarize and get the balance. Then after this, we need to check if the balance has been, if the posting has been posted correctly, and therefore we are going to trial balance. So trial balance is aimed at checking the accuracy of posting. How have we posted? Did we commit any error or not? So that is trial balance. Then after that, we will perform some adjustments if there is error or omission for the purpose of making the information accurate. And then after adjustments, we will prepare financial statement. And then after financial statements, now we know the results of the business. Then we are going to analyze those results. The results we are getting will be analyzed, and then after analysis, we have to make decision, and the decision will get us back to the transactions. So this is how the accounting cycle is. Okay, now let us move to computerized accounting. As I told you, in accounting cycle, we have several processes that needs to be done in order to achieve the desired process of accounting. Okay, so the computerized accounting, this one is simply a use of computer system and accounting software to record, process, store, and report financial transactions. So those matters which were supposed to be done manually are now translated in computer processes, and now the computer is doing as it was done in manual. Transactions are entered once, and the system automatically applies the accounting rules and updates all related accounts. So when you record sales in manual account, you are supposed to find everywhere, where should I record sales? So you record in the books of prime entry, you post it to the ledger yourself. You have to check if you have any adjustment, take it to the trial balance, take it to financial statement, analyze the sales, and so on. So in here, if you have the accounting system, then accounting system, right after recording the sales, it will apply every rule and update you all the records that will need to use sales. So there is no need of you doing it manually. The system will do it for you. Okay, it covers the entire accounting process from transaction recording to the preparation of financial. So you only need to introduce the transaction in the system, and the system will do the rest. So the computerized accounting is applicable to the following business. Number one, the small business. The small business, they look like they are easy to manage, but still they are not easy to manage. There are so many issues that they need to adhere, they need to understand, they need to know that is happening in their business. So in this case, small medium enterprises, they need application that will help them understanding their business. But also we have large corporations. As we know, the large corporations operations are very complicated. There are so many issues, there are so many transactions, and therefore if you are not keeping them well, then you might have a lot of errors, less control over the money, and everything will go bad for the business. And sometimes it can even cause the business to collapse because you don't know what is really happening in the business. So also in large corporation, it is. We have NGOs and projects. we need to track the cost of projects. We need to have something that can help us to put and process the information right after incurring those costs. The NGOs, these are non-profit making organization, also they need to maintain accurate information for their members. So in order to put the information very accurate and avoid unnecessary errors, using computerized accounting will be solution for that. Government institutions also, as we see now, the government is using the computerized accounting system called MUSE, and the purpose of using this is to ensure that there is a transparency in payment. Everything is done in a way that the government can save and can reduce the errors. Okay, why transforming from manual to computerized? Why do we shift from manual to computerized? We have several reasons. Number one is accuracy and error reduction. As we know, something that is performed by human beings will always have errors. So in order to reduce errors, we give the access to the system to do it. And then we have speed and efficiency. The time that will be taken to record a transaction, post in every book, will be much longer than the time that the system will take to record and post the transaction everywhere. So the computerized system gives us speed and efficiency, but we also have better control and transparency. In controlling, we have what we call segregation of duties. One person should do one task, and we also have audit trail as the watching of what is going on in the system. So the better control will come in this form. If you give user access control, then one person will be only accountable in one part of the system. For example, let's say if you make the payment access control or workflow, then you'll have someone who is preparing the payment. You'll have someone who is going to watch the claim, like pre-auditor, who will be only checking if there is any error or something that is not clear in the claim. Then you'll have someone who will approve the payment. Then you'll have someone who will take the payments to the bank. And then you'll have another one who can do bank reconciliation. So if it is more than one person, then the system will help you control it. So now in manual, anyone can do anything, but in system, you can give them what access to have, so they cannot access something that they don't have in the system. In audit trail, sometimes we have employees who are very unfaithful. Okay, so for the case of transparency, the system show you what is happening in the system. It will give you the list of actions that has been performed by each employee. Okay, so audit trail will help you to see what happened when you were not around. So if someone changed something, it will tell you. If someone created something, it will tell you. So it is easy to follow up in case of any errors or omission or material misstatement. And then we have improved decision making. So now we have the error-free information. Okay, yes, now the quality of information is high, and then the nature of information we have is good, and the information are readily available. So it also improves the decision making process by ensuring that the informations are available at the time when required. Scalability and compliance. The computerized also allow you to grow allow you to grow. So most of the systems are designed to allow growth of the business. You can start small and the system will also look small. And then as you grow, the system features will allow you to put more data, will allow you to put more entries, record everything. So as you grow, the computerized also grow. Now suppose in the manual accounting you are increasing the operation, that means you also increase complexity of your business. You need also to add maybe accountants for that particular operation. But in computerized is something different. Compliance, most of the computerized systems are designed to comply with the standard laws of this certain country. So in this case, that is the reason we are transforming to computerized accounting. So now we have few conversions that I would like you to know before moving to other issues. So accounting as other disciplines, it also have principles and conversions. So number one is called the business entity principle. This one says the business transaction must be recorded separately from the personal transaction of the owner or other businesses. The purpose of accounting for our case is to ensure that we know what is happening in the business, what kind of transaction did we perform, is the business getting profit or loss, and what is the financial position of the business. So if you mix the business transaction with the owner's transaction, then you are going to create something that will not give you a true picture of business performance. So in that case, that is the reason why we suggest that the transactions that are not relating to the business should not be handled by accountants. Rather, it should be taken as drawing the reduction in capital. So as long as the owner has contributed capital, all the personal transactions should be taken as deduction in his capital. We call it drawings and dividends. So all personal transactions are recorded under drawings and dividend. Now this has been a common practice in most of Tanzanian business. Like when you go to the shop, the shopkeeper pays school fees for his son. They keep it as business expenses for the purpose of reducing tax. They buy food for their home. They keep it as business expenses because they want to reduce amount of tax. Now it is not always the case that you are going to reduce the tax by introducing your personal transaction in the business. Rather, you are alerting the tax officers that your information are very, very reckless and you are not someone they should trust in the information. So avoid this because they don't save you much, but they give you very good amount of trouble. We have double entry. Double entry principle is the one we use in recording. Every transaction should at least have one debit and one credit of equal amount. So in the law of contract, we say each contract should have consideration. Okay, so this happens like this. When we buy, there is something that we give and there is something that we receive. For example, if we are going to buy mandazi, then you'll have to give money and receive mandazi. The value of money you give and the value of mandazi you receive, they are equal. So double entry principle needs us to recognize what is given and what is received. So in this case, what is given is money. Let's say you are buying mandazi of 500. So if you give 500, then the mandazi you receive will also cost 500. So in this case, you debit the cash that you give and you credit the mandazi that you debit the mandazi that you receive, and you credit the cash that you pay. Now, because the consideration and the payment have the same value, then all of them will be 500. So that is how the business, the double entry principle works. Now, in the systems, most of the systems are designed to adhere double entry principle, and there is no system that can help you, can make you violate this principle, because this is the only principle that is used in accounting, okay, in recording business transactions. So in that case, all computerized accounts should observe this, because that is the principle, and most of the errors are coming from this part. Now, in order to reduce the errors, then the system will not allow you to save the transaction if debit is not equal to credit. Okay, so that is how it is. And then we have accrual principle. Accrual principle is only saying that income and expenses are recorded when they are earned or incurred, not when cash is received or paid. So we only record income and expense when they are earned or incurred. If you buy something today on credit, record it today, and then you'll pay it later. If you sell something on credit today, record it today. Why? Because in this case, if you go to the last one, it says in the matching concept, expenses should be recorded in the same accounting period as the income they helped generate. Meaning that if we need to find the profit accurately, we must consider comparison between income and expenses of the same year. So if we are recording when we pay, then we cannot get the trend and actual profit for the period. So in that case, that's why accrual and matching goes hand to hand. And then we have historical cost principle. Historical cost principle, it says that the assets are recorded at their original purchases value, not the current market value, ensuring the objectivity and reliability. So when you buy something, the value of that something you buy is the cost you have paid. Okay, so when you record the assets in the business, we have to record at their purchasing price. So that is historical cost principle. Now let's see how can we set up accounting system. Accounting system, as I told you earlier, it is the system which works all the function of accounting in computer. So we need to know how to set up the accounting system. Number one, we need to understand the business requirement. The business requirement, this one includes the following. Number one, identify the legal type of the business function. So legal type, we have 4 of them. We have sole trade, the business of 1 man. We have partnership, the business of 2 to 20 in partnership. We have company, we have cooperatives. Now these 4 different companies, 4 different types of business have different compliance requirement. They have different consideration in accounting. They have different treatment in capital. For example, cooperative doesn't have capital, the company it has shares, partnership it has capital, sole traders it has capital. Okay, sole trade is only 1 man, so we don't need to share the profit. Partnership, we share the profit. Company, we pay dividend. This one we are not paying anything. Okay, it is based on their constitution. Okay, so Understanding the legal type will help you maintaining the proper ledgers and ensuring that you have adequate information captured. And then we have functional types. Functional types, we have services. Services, we have two groups. We have the service with inventory, the service without inventory. The service with inventory, it may include garage, it may include car wash, laboratory services, maybe restaurants, and so on. Service without inventory, it may include maybe professional services like trainer, coach. We have people who are doing business consultation. We have attorney. So those are the service without inventory. So if you have service without inventory, then you know in your business you don't need inventory. So you only record the sales minus the cost you have incurred, done. But if you have service with inventory, now you know in your service you also incur some cost in inventory. So you will have to report inventory in your books. And then we have retail and wholesale. These are simply one group. Retail and wholesale, they all buy and sell. They don't add any value. So you only need to understand that you have to record the purchases. Purchases can be cash or credit. You have to record the sales. Sales can be debit, can be credit or cash. And then you have other issues relating to the operations, the expenses, and other issues. And then we have manufacturing. Manufacturing has 3 stages. Number 1 is purchasing of raw material. Okay, these raw material are then transferred to what we call work in progress. When you start producing, the raw material are now converted to what we call work in progress. Okay, then after work in progress, we have the finished goods, which is the last part. So in this case, manufacturing will be the most complex business we can have. This is finished goods. So in this case, you'll need to track the purchases of raw material, and then you'll also need to track the cost of work in progress, meaning the production cost, so that you can get the cost of finished goods. And then when you sell the finished goods, you'll have to record also what you have sold. So in this case, now you see the complexity. Here, when the retail and wholesale will just buying and sell. Here we buy, produce, and sell. So purchases of raw material, track the cost of production, find the cost of goods produced, sell them. So now this is very important to understand. NGOs, they have their own way of operating. So they will have their constitution, and therefore any undertaking in the business will be based on their constitution. So the constitution will guide what kind of books to keep, will guide maybe if they are taking subscription or not, they are having what sources of income, and so on. So those are the requirements in the business. But again, we need to see how we can select the accounting software. So choose the software that suits the business size and complexity. If your business is just simple, don't choose the software which is too complicated. You'll just confuse yourself. Okay, so here are the norms that you need to adhere when selecting appropriate accounting standard, accounting software. Number 1, do not choose because others are using. Most of the people, they are just asking, what kind of software are you using? I'm using Tally. Okay, na mimi Tally. And then another one, it's QuickBook. Everyone QuickBook. Sasa hii, it gives us problem especially in accounting, because you don't know what the software is capable of, and yet you are putting your information. And once you put the information in the software, then getting the right information can be problem again. And then don't choose softwares because they are cheap. No, we don't go for cheap option, we go for the solution. Consider the features such as general ledger, account payable, payroll, manufacturing. Okay, so you just choose the features that suits your business. If you are not manufacturing, do not select manufacturing. If you don't have inventory, do not select inventory. If you don't have payroll, do not. There are some people who likes to see more features in the same system, and even the features are useless. So the more useless features you have, the more confusion you will have. Why? Because you don't know where you are going to use the rest. So just choose the features which are appropriate to your business. Like now in the most of the accounting software, we have switch on and off options. So do not switch on everything. Okay? They will just confuse. Just switch on the things that you use in your business. And then ensure the system support local tax and the regulatory requirement. Make sure it gives complying financial reports. So those are the issues that you need to follow when selecting accounting system. Then we have chart of account. After selecting the accounting system, then you will be required to give chart of account. So the chart of account will have the following 5 elements. These are the elements of financial statement. So we have asset. When we are talking about asset, these are the resources of the business. They are resources that we use in generating money for the business. And the liabilities, these are the obligations. Obligation can be legal or constructive. When we say legal, it's the one which comes from legal application, contracts, laws, and the rest. When we are saying constructive obligation, these are the one which comes from promises. For example, if you promise your son that if he becomes the first in class, you'll give him 5,000. Then once he becomes the first in class, the 5,000 is obligation to you because you promised. So in the business, all promises and the rest, they can also be formed as liability. Good example of the promises that the company makes is warranty provision. They tell you if you use the product and you find it faulty within a certain number of days, bring it back, we'll help you repair it. Or sometimes they give guarantees, we'll give you another one, or we'll give you money back. Okay, so those are the constructive obligation that the business may have. And then we have equity. Equity is simply the difference between asset and liabilities. You know, in assets, we have all together. It is not necessarily the ownership, rather it is control. So in this case, assets contain some of liability. So in order to know how much do we own from our asset, you have to take asset, you minus liability, and then whatever is left is what the owners or the shareholders of the company own. And then we have income, is the amount earning from the undertakings. So whatever we earn from undertakings business, that is called income. So we have two types of income. We have principal income and we have subsidiary income. Principal income is the one which you get from the principal operation. For example, if you are Mama Ntilie, then selling food is principal operation. If you are selling clothes, then selling clothes is your principal operation. So when you sell clothes, you record them as sales. But now, sometimes you allow people to pay by using M-Pesa, and therefore they are paying you by M-Pesa. So when they pay by M-Pesa, you earn some commission. Those commission you have not intended to get them as you are part of operation, and therefore they are called the subsidiary income. So subsidiary income is not core income. It is not coming from core function, but the business earning as the result of doing business. Okay. Expenses also, these are the amount incurred in running the business, the cost that we incur for making the profit or for making the sales in the operation active. Those are called the expenses. Now, after creating chart of account, then you will have to enter the opening balance. Now, in the most of the system, entering opening balance and creating chart of account, they all go together. Like we did yesterday, we were just posting opening balance with the ledgers. Okay, so there is no need to separate the process, because even in the system it will tell us what is the opening balance. Okay, where do we get the opening balance figures? We get them from the financial statement, we get them from the documents, we get them from the legal contracts. Maybe the rent, we'll have to find it from the contract. How to record figures? Now we have to use dead click. Dead click, this one and this one. Dead is the first one, click is the second one. So dead stands for debit, expense, asset, drawings, and dividend. Click stands for credit, liability, income, and capital. So it suggests that all debit, all expenses, assets, drawings, and dividend will go on the debit side, and the credit will have liabilities, income, and capital. So in this case, when you go to the system like Mhasibu app and you use also Tally, they help you classifying the balances correctly. So if you create the ledger and you call it expense, it will actually take it to the debit by default. You choose liability, it will take you to the credit. Okay, yes, so that is how it works. So that is what we call dead click. We use it in recording the opening balances. And then we'll have to configure the system setting the financial year and accounting periods, choosing the period that they match the tax year. Why do we have to choose the period that they match the tax year? Because you don't need to mess up with the tax, and therefore the best way to comply with the tax without having much suffering is by ensuring that your informations, your processes match exactly what the tax authorities want. So in this case, maybe you are starting your business in August to July. It is correct because you have the right to choose when to start your business. But now you see, the time that they'll need you to file the return, you'll be in the middle of the year. So you'll have to file the returns in the years that are outside your financial years. So in this case, we suggest that you find the accounting period that match your business. Now you see some business in Tanzania, most of them, they are starting from January to December. Why? Because the tax period, the main tax period starts from January to December. We have the one of June, July, June, and we have the one for January to December. They prefer January to December because that is how the year is. Okay, and then you have to define the currency, you have to define the tax rates, you have to set the default account for the system transaction. So this one will help you to make the system ready for working. So create necessary ledger like sales, purchases, cash, bank, create inventory if applicable, create rates, tax rates if you have more than one current, create functional currency and alternative currencies. When you say functional currency, we are referring to the currency of transaction, the currency of reporting. If you are working in Tanzania, by default your functional currency is Tanzania shillings. If you are working in US, by default your functional currency is US dollar. You cannot operate in Tanzania and have the functional currency as dollars. There is no such a thing. So dollar will be alternative currency. Okay? And then establish users' roles, permission, and approval workflow to ensure the security and control. Define who will do what. So this is the setup part. Then now, after setting, test the system. So you have input everything, test the system, verify the financial report, income statement to ensure they are correct, make necessary adjustment before going live to avoid the errors in operation. So let us see how in reality this can be done. Okay. So let me open we have this case study here, the one that we are going to use. Let me start with Mhasibu app, and then I'll go for Tally. Let me open this case study also so that we can read and understand. Okay. So here is the case study. As you see, our name of the business is Mwanga Furniture Workshop and Showroom Limited. The nature of the business is manufacturing business. It has manufacturing of furniture, customer specific job, and they also trade, buy and sell some of inventories. Their financial year starts from January 2026 to December 31st, 2026. Business address is given there, and we have contact details given, currency used given, payment details given. Okay, and we have ledgers, ledger names, groups, and the opening balances. Okay, and we also have the inventory opening balances, we have them, and we have assumption that all products are charged at 18% VAT. Okay, so after this, then we are going to input all of this in the business. So let's start with Mhasibu app. Okay, let's start with Mhasibu app. Mhasibu app, we have the business info, is Mwanga Furniture. So when you open the app, it will just take you to the dashboard. From the dashboard, you'll see all the figures are 0 now. So it indicates that there is nothing recorded here. Okay, so first we need to go for the business info. For business info, we'll need to input the business name, Mwanga Furniture and Workshop, and Mwanga Furniture Workshop and Showroom. And then business type, we can choose as per our instruction, it was manufacturing. And then start date, you select the start date, which is January to December, the end. And then we have some options. Multi-user, we are using ourselves, so we assume that it is only one person. But if you allow this one, then it will ask you to manage users. So that means the system will be controlled by more than one person. So now I disable it. And then job card system, we use job card because the business do the jobs specific for the customer. If you find your business is making customized the product for a customer, not standard product, then you are using job. That is what we call jobs. And then we have point of sales, which are used mainly in supermarkets, so we don't need it. We have multi-currency, if the business using more than one currency, we also don't need it. We have tax information, they are not provided, so I'll just leave them blank, but if you have them, you can input in another business. Then we have contact information, we have phone number, we have email address, and then we have address. So the address, let me copy it from the case study. The address is this one. The address is this one. Now if you see here, it needs you to make it in comma. Okay, so do not make it in multiple line. If I paste here, this is what we call multiple line. But now to save the space of invoice and everything, the system was designed so that the address will be taken as in comma, not in separate lines. So Mwanga Furniture Workshop Limited, I take it back, put comma, space, and then Geita Town, back, comma, space, region Geita, comma, space, and then United Republic of Tanzania, comma, space, full stop. Done. The payment details, it may have multiple lines because this one comes at the end. Okay, so if I click here, save business information, it will tell me that business information has been saved successfully. Okay, so now after this, then according to the instruction I was given, so I have covered all of these of preparing everything. Now I have to open the ledgers to record the opening balances. So to record the opening balance, we go to masters. Now you see in the AI assistant, after business info, we have AI assistant, which we'll cover in the future. We have the training center. This is where the materials, the videos, and everything are stored. So in this case, the training center is only for the purpose of training you on how to use the system. And then we have system management, which has no function to you, just managing the devices. And then we have masters. So in the masters is where we create everything. Now you see the ledger groups, The ledger groups we already have. The system have default groups, as you can see here. All we have more than 25 groups for recording transactions. So in most of the transactions, they have already been predefined. So in this case, we don't need to make any group, and then we are moving straight to the ledger. Ledgers, we have Mwana Timber Bank Loan. I have created some of them yesterday, so let us continue from here. So we have ledgers which also needs to be created. Allow me to economize the space. Allow me to economize the space. Yes, now it is okay. Let me take this to minimize in such a way that I can see. So we have recorded Mwana till here, and now okay, so our last ledger was Lekki Zone. Lekki, not Lake Zone, it is Lekki Goldie, Lekki Zone Paint, yeah, Lekki Zone Paint. So after Lekki Zone Paint, we have Geita District Council, the receivables. Okay. So I'm going to write here Geita District Council. It is under group of receivable, and the opening balance was 5.2. I click create, and then we have Lake Goldie Mine Limited. This also is receivable, and we have 4.1. Okay, and then we have Umoja Secondary School receivable 2.4, and then we have Bright Office Solutions. This one also is receivable 1.8. And then we also have land and building. Now the fixed asset, they are all falling under tangible non-current asset. So we click tangible non-current asset. This is 90, 123, 123. Okay, and then we have plant and machinery. Plant and machinery, tangible non-current asset was 38 million. And then we have motor vehicle. Motor vehicle also in tangible non-current asset. The opening balance was 22. And then yesterday we agreed that we should not record accumulated depreciation, so I skip it and record cash in hand. This one is under cash in hand. So how much is it? 2.8. And then we also have CRDB bank account. This one is cash at bank, and the value is 21,700. Okay, create. So now after creating these ledgers, then I will need to verify that they have been posted correctly. So in order to verify that, I'm going to the reports and I see the trial balance. I see the trial balance is not balancing. Okay, you see the trial balance is not balancing. In this side we have 188, in the other side we have 70, which means they are not equal. Okay, then after this we can also check the balance sheet. The balance sheet also is expected to balance. So now you see the total asset is 188 and the total equity and liabilities will be this much. And now the difference is noted that we have difference of 118 million difference. Okay, so with this difference we need to work it out to eliminate it. I will tell you why we have the difference in future. Let us also move to the inventories. Okay, the inventories, after this one we have not yet completed the process. We also need to add the inventories. We are given the inventories, opening balances, everything we are given. Okay, so in this case inventories we cannot add the way as we have added ledgers, because sometimes in the business you can find you have more than 1000 types of inventory. So the best way to deal with them, we just go to masters. Okay, make sure the currency is set. Okay, masters, make sure you have VAT rate. We already have masters. Make sure you have appropriate unit of measure for the inventories that you are about to enter in the book. So in this case we have we have pieces, sheets, liters, pieces, and sets. So I need to create those. So I'll just come here and say these are sheet, don't know, sheet will be SHT, and then I have sets, okay, and then I have pieces, this one, and then I have liters. L. So all of them are here, no problem. And then in the masters I also need to have the stock groups. In the business we were told there are some groups here we need to know. We have raw material, we have work in progress, raw material, work in progress, and finished goods. So also you need to make the groups. So just come here, write the group name, raw material, add group, you say work in progress, you add, you say finished goods, you add. And then after this, going back to the master, then product and services. Now you follow the steps in masters from the top to the bottom in order to make everything correct. Okay, they have been arranged in a manner that it will give you simplicity in making the flow. Higher in the products and services, we can upload them. We have the option to upload here, bulk upload. So instead of adding one by one, I would like to use the feature for uploading. So the feature for uploading is very simple. You only have to do the following: bulk upload, download a template. The template will download. After the template downloads, then we can find from downloads. Why is it necessary to download from the system? Because the template you have in the system will have your own information. This is not the general information, it is the information that you have generated by creating items in your system. So do not create something else, just use this template. So let me wait for it to open. Here we are. So for the purpose of making, let me close this. So here we are. Okay, now from this bulk upload template, I will add another sheet here. This sheet will be like working for posting what I need. So yeah, here we are. Now I'm going to copy and paste these. For easy access. So copy, going to the sheet that I have created, paste them. Now we are good to go. Okay, here. Now we are good to go. So the issue is here. We need the product name. So I'll just go to the sheet that I have created, copy the names and paste them here. Okay, and then they'll need stock group ID. So ID, we know the first three are raw materials and the two are work in progress. The last three are finished goods. So we go to the stock group. Raw material ID is this one. As you can see, raw material, the ID is this one. Control C. And then you go to the product, you paste. Now be very careful because the product ID are different. If you observe, my product ID and yours will not be the same. So these are the product ID for the working for the raw material. Let me get the one for work in progress. Control C, and then here is work in progress, and then let me get for finished goods. Stock groups, Control C, this one. Unit ID. Okay, so the timber is measured by, I go to the sheet, pieces. So pieces, unit, pieces, unit ID is here. Copy, paste. And then the second one is sheets. So sheet, this one, paste. And then the third one, go to the third one, liters. Liters, liter, the ID is this one. You copy, you paste. And then the rest, except the last one, are the pieces. I'll just drag them, excluding the last one. The last one is set. So unit, the set is this one. Control C, and then I paste it here. Okay, now the VAT ID is standard, as we agreed that all the products will be charged at the standard rate. So if you go, the VAT ID is already correct, standard. If we charge at 0 rate, then we are supposed to copy this one. Okay, so I'll just drag the standard from the first point to the last point here. The opening balances and the value per unit, I'll just come and copy paste the following. So we have three things remaining: opening value, value per unit, and the order level. Okay, so I'll just come to the sheet with so I'll just copy these two, copy, and then I'll paste them. So I have the unit, opening balance, and per unit, and then I'll just copy the reorder level and paste it here. So this is for simplicity, but in the system do not write pieces, so I'll just delete by writing 80, 50, 40, not applicable, you just leave it, not applicable, leave it, this 5, this 4, this 100, done. So after this, we have created everything ready for uploading, so we don't need again this sheet, so we delete it, and then our template is ready for uploading. So just close it, go back to the system, bulk upload. Now the file is ready, choose the file, okay, then go to downloads, and then this one, pick the first one, open, boom. So the products are here.